Let us move on to the revenue budget now. And the first point under revenue budget will be revenue receipts. So again, focusing on the term receipts, mean government is receiving something, but the unique part of revenue receipts is it is neither related or concerned with liability or asset. Okay, how we'll understand it? First, let's define it. All those receipts that neither create a liability nor reduce an asset. Okay, nothing. Neither we are talking about creating a liability nor reducing an asset. Then you will ask, if not this, then what? And also, if you see, what we see in capital expenditure is liability and asset for years. So you must have taken a loan in 2015 government, and it must have taken, and it repays it 7 to 8 years later. It's a very long term budget, and with capturing the exact part which is relevant for that financial year. Okay, if it is repaying an old debt in the current financial year, then it is included. If it is granting a new loan, then it is also captured, but only for this year. Whereas revenue receipts are all major expenditure. No, let's not write like this. These are majorly for current financial year. Okay, you do this, you have this receipt or expenditure during this year only, and that is how it is captured. When you take a loan, you have to pay back. When you grant a loan, you are expected to get it back. Okay, and when you invest in shares, you might redeem those shares someday. When you deposit some money in your bank account, you have the power to redeem it. But when you talk about revenue receipts, these are non-redeemable. When we will discuss example, it will be much more clear to you. Now, revenue receipts, the money that government receives, is classified onto two types. But before we classify that, just understand or think of one of the important payment that majority of the citizens do to government. You don't need to question government. It has to be done when you are earning salaries. I think you are getting it now. It is tax. Tax are something which government has to be given irrespective of whether you will like it or not. It depends on how much income bracket you are in. And see, you have the taxation for a current financial year, right? Mostly you pay tax for a particular financial year. And when you pay tax to government, you do not seek any redemption from it. It can, of course, use it for your welfare by creating roads, but it is not a direct redemption happening. Government might just not use it for specifically you as well. Okay. So the two kinds of receipts that fall under this section are, one is tax revenue and the other one is non-tax revenue, or tax receipts or non-tax receipts. Okay. Now we shall split this tax and non-tax also into various subsections, but let us understand. We'll also understand non-tax revenue in detail. First, let's break down the tax revenue. Tax revenue can be broken into two parts. One is direct tax and the other one is indirect tax. Now you will ask, what is this? How something can be direct and indirect tax? We'll explain it. So direct tax happens when the person who is taxed is paying the tax. Now you will ask, what else happens then? If you're taxed, you need to pay the tax. But no, in the indirect tax situation, you will realize that person who is taxed shifts the burden, of the tax. Okay, so now let's decode this. If you are paying income tax based upon your income bracket that you are in, government imposes tax on you. Okay, government imposes tax on this particular income earning individual. Okay, he's an office goer. Okay, so he is taxed. So when we talk about income tax, it is a kind of a direct tax. Okay, similarly, when corporations function, they pay a corporation tax, something which comes out of their profit. So these things have to be paid by the corporations itself, right? Let's draw some corporation or some factories. Okay, but when we talk about indirect tax, when a producer of a particular good is being taxed, can you tell me the common tax that is applicable in India? Goods and services tax. So these goods and services tax are imposed upon a producer. So for example, a producer is making coffee. Okay, producer is making a coffee. He's a coffee manufacturer. So the tax is imposed on coffee, the product, and the person who is producing the coffee shifts the burden of this tax onto the consumer. Consumers have to pay this GST, not producers. So this becomes an indirect tax. Okay, so example is GST. Other than this, if you are importing expensive vehicles from abroad, okay, so then again you have to pay some tax, and this is not being paid by the producer, it is paid by the consumers. So this is called customs duty. So all these four types of tax we have understood, majorly two, are a part of a revenue receipt. These are not redeemable. Okay, I hope this direct and indirect tax part is clear. But now when we move on to non-tax revenue, let us understand. Now, before moving on to non-tax revenue, let us quickly go back to the capital receipts. Okay. And right. Okay. So whenever a loan is taken by the government, it also needs to pay some tax, right? So whenever government is, so for example, focus on this. If government is repaying a loan or recovering a loan, okay, if government is recovering a loan, okay, so it also will have an interest component with it. It also will have an interest component, okay, and this is part of a capital receipt. But when a loan is repaid to government, the loan part is just included in as the capital receipt, only the loan part and not the interest, because interest is being added into non-tax revenue. The interest receipts that are being taken by the government because if the loan is repaid to government, interest will also come along with it. So this interest receipt is a part of a revenue receipt. You will ask why? Because interest is just one of the other services rendered by the government. So it is like a debt service charge. Okay, when government provides services to us, so these and it charges some money, all of them fall under revenue receipt. Okay, the similar case, interest payments will also be applicable for revenue expenditure. We will find out later on. Next, we have government companies, government investing in various places, so dividends that they earn. Okay, profit that the government companies earn, profit on investments. Okay, all these fall under non-tax revenue. Similarly, as we just discussed, the debt service, so it's a service charge. Okay, so even like when you go and make your passport, okay, when you make your passport, when you make your driving license, okay, all these documents that government helps you with, okay, and other receipts of the services rendered by government. Okay, for all these resources, government has a non-tax revenue. Then later on, it can also have cash in hand. Of course, government also receives a lot of grant. So whenever government have cash in, not in hand, in form of grant, aid from foreign agencies. Can you recall and tell me what does a grant or an aid means? Do we have to make a repayment on these things? No, it is just a unilateral payment. So we call them transfer payment. Transfer payment. So all the transfer payment, transfer, not payment, transfer receipts rather. Okay, transfer receipts. Somebody else is making the transfer payment, so that becomes a revenue receipt. Fine, I think revenue receipts part is clear to all of us.